Hola guys, ¿qué pasó? What's going on? This is Hala Pablo. I want to look at Ethereum. Let's look at Ethereum today. Yesterday we did Bitcoin. We're still consolidating. Everything is in a strict consolidative trend, it seems like. Many of the most important tokens and coins in the crypto universe still trending. Even though this is Sunday, typically Sundays are bloody Sundays, especially in this current bear cycle that we're in. But we have seen some uh, counter trends occurring on Sundays where we have little pumps, little micro rallies, I call them, which turn out more often than not to be bull traps. But today we are hugging support. It seems like we've just been hugging support for the past week in many of the most significant altcoins, and to include the king of crypto, Bitcoin. So I want to draw a few things as we look at. We're just gonna limit ourselves to Ethereum today. If you want, you could look at my video I did yesterday on Bitcoin. I did also just an audio video that I uploaded to TradingView. You can look at that one as well. With Ethereum, so let's go. Let me look at this here. We're going to do it on the 4-hour. And I'm going to assume that we are in a redistribution range. And I'll tell you why I believe that. Of course, we know redistribution is it's just a momentary interruption on a downtrend where we have some lateral consolidation to eventually resume the downtrend, further downtrend. And I think we're just at this this brief interruption right now. So here we could draw a good trading range as far as like support and resistance. And let me try to blow this up a little bit. I'm going to do I think we could do like a regression trend on this as well. We could do two. We could do a regression trend from here to there. That would have been, this would have been the UTAD. This area here, UTAD, the top of this. UTAD, of course, means up thrust after distribution. This bull trap here, and then it came back down, broke the channel support. And now currently we are in, you know what, let me go ahead and remove that just so I could show you that trend. Look how it broke this this support. How did we know it was going to break that support? This is what I mean when I say you can go back and back test these old channels. Just don't take stuff like this for granted. If I could convey any kind of helpful advice or recommendation for those just beginning to trade, and you're not like you're used to using all kinds of indicators and clutter to clutter your charts, and you want to get into like support and resistance trading and liquidity voids and all that good stuff, volume price analysis. Go back to past channels like this, draw it out when the channel's already been broken. So we already know this distributed out of this channel. It didn't keep going. We see where it mitigated this this block here, or this liquidity void, filled in this void. Think of liquidity as water, and water always wants to seek its own level. So whether it be down or up. So we see the water level, or the liquidity, the price action, coming back up to mitigate this this block here, which turned out to be a very significant sell order block. When it met this mitigation at the this would have been the overbought point in this ascending channel. See, you don't even need an RSI if you understand price action support and resistance, and trend support. So we knew it came up here. It mitigated this previous point here, where we're seeing this redistribution range where it broke trading range support and dumped right here. That point was the mitigation point for this UTAD in this new range. We'll do this on the macro on the 4-hour. We could of course blow up this one, but we don't need to. We'll just go off this one. So that would have been a good area to take profit, obviously. Move drawings. Now what I want to do is, keeping that same principle in mind with utilizing liquidity voids, we could look at the liquidity void on this new regression trend coming down from this high, from this UTAD, downward. And we see the areas automatically. Here's another thing, guys. Get used to looking at liquidity voids. Make it a practice to just, I mean, these voids should just pop out at you. Here's a void. Here's a void where it was mitigated. Now the upper trend support, or rather, let's call this resistance because we're in a downtrend. Every time the price action hits the top or the overbought point in this regression trend channel, this descending channel, we can consider it a mitigation of the liquidity. So here's a void that got mitigated. Here's another void that got mitigated. It's water seeking its own. And then eventually when this goes back up to here, we could count on another mitigation point and assume that there will be a sell-off if the volume continues, if supply continues to predominate in the vertical bar volume. So we can go back and look. Every time a void was mitigated on the upside, we're seeing substantial predominance of supply. All these mitigation points have considerable supply volume spikes. And here, of course, we have growing supply has been continuously, look at the overall supply. Damn it, why isn't this writing? The overall supply predominance in these spikes. See how they're growing? See, guys, we are in a downtrend and supply is growing, so we have divergence. We have the price action going down, supply bars going up volume-wise, and so that just that's confirmation of selling power, and the bears are in control of this. So we can just assume that this is going to continue to distribute. At some point, we're going to mitigate again this lower area here. Call this trading range. You know, well, this is the selling climax of this Wyckoff schematic here, which is also the trading range support. So this floor here, we're going to eventually come back down and hit this floor. Now, when the price action hits this floor, we want to look and see if we see buildup of supply as the price action begins to make its way down towards the selling climax floor, thus mitigating this lower liquidity void, and it breaks through it, comes back up, retests, and turns this now into a resistance level, and it continues downward, then we would draw out the Fibonacci retracements based on this range, and we could see how far down we can project Ethereum to mark down. And we do this by going off the selling climax. Well, that's the extension. We'll go off the selling climax here, the deepest of it here, and then there. No, that's not going to work either. We'll go ahead. Hold on a sec. Let me get this here. Let me erase this. That's the okay. Fib retracement here. There we go. So we go purely off the retracement based off the selling climax as the low and the UTAD as the prior swing high, then we could see down to the 1.272. We can have $500 Ethereum. I don't think it's going to go that low, actually, guys. I really don't. I think that we're not done distributing. But I mean, this floor here is $1,000 floor. I think is going to pretty much should hold. That would be a major mitigation if it comes down here. And I imagine we would mark back up from that to start closing out and going back up and retracing as a counter trend these upper liquidity voids like this one at 3,400. So it just remains to be seen how long it's going to take. We're in unprecedented territory right now. You know, like I've been doing this stuff since 2017. I've been analyzing crypto, been trading very successfully, and I've never seen this. I mean, this has just been tragic. This cycle, of course, just with all the capitulations on the centralized exchanges, which has in turn created an incredible amount of FUD. Those of you who don't know, fear, uncertainty, doubt, which has affected obviously the price range, the price trajectories of these cryptos. So I don't really know what to expect. I don't have a crystal ball, but I do see this continuing at least to have these micro liquidity voids continue to be mitigated on the downside as the price continues to retrace. And any kind of micro rally that we see in the interim, I would be very cautious into buying right now. I would be focusing more on DCAing and dollar cost averaging as these prices continue to retrace. Dollar cost average as you can. Never go all in and never invest money that you need. Don't just only invest disposable income in crypto or anything at that. You know, go to the damn casino and play the roulette table. You don't gamble your rent money or mortgage or anything like that. So that's obvious, and that's a given. So same thing with crypto. DCA as you can, and don't just be wise, and we'll all get through this. I promise you, we will get through it. But we're just going to have to play it safe for now. Train your brain to look at the liquidity voids and in conjunction with volume spread analysis, and we'll be all right. All right, guys, let me let you go. I need to drink more coffee, obviously, and I'm so tired, man. Took a road trip this weekend. Just got back from San Marcos, Austin area, and I'm exhausted. I still haven't recovered. So anyway, all right, let me let you go. Talk to you guys soon. Be safe, and like, subscribe if this is something that that you enjoy, and I'll be giving more updates shortly. All right, guys. Adios. Bye-bye.